Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on the evening of Tuesday, December 25th, 2018, and I'd like to wish everyone a Merry Christmas, a happy holiday season, and a great 2019. And in this video, I'm going to discuss the big picture outlook for precious metals and the short-term outlook as well. So starting off, we're going to take a look at some technical and sentiment indicators for the S&P 500. The severe weakness in the stock market in the last couple months has really been driving precious metals higher, and in the big picture, this is a very good sign for precious metals because further weakness in the S&P 500 would pretty much confirm the end of the Fed rate hikes, and further weakness in the stock market would probably signal more weakness in the economy, potential for a global recession, and that would induce the need for Fed rate cuts and perhaps other measures, which would obviously be very bullish for precious metals. So precious metals we're starting to see the early signs of a bull market in precious metals, or at least we're seeing the things that come right before the start of a bull market in precious metals. With all that being said, the S&P 500 and the stock market could be only a few days away or even one day away from putting in a significant low, at least a medium-term low. Even if you're a bear on the stock market, you think next year is going to be ugly and we're going to see lower lows. Even in that scenario, when you're looking at this data, you have to conclude that there's going to be some kind of a counter trend rally, something that can last at least a couple months. If you look at these indicators, I mean, the put-call ratio there is second from the top. That's a 5-day moving average. That's at the highest level since 2007, since early 2007. So we're looking at basically a 12-year high, a 12-year extreme. If you look at the percentage of stocks trading above the 50-day moving average, that's down to 1%. That's the lowest since, I mean, it appears tied for the lowest since the summer of 2011 or since the depths of the global financial crisis in October 2008. So, I mean, these indicators are all at extremes, except for the VIX, which it's kind of close to an extreme. But if we see a big pop in the VIX in the next day or two, that could really be a signal that the stock market is, that the bottom is imminent. I mean, I already think that it's imminent, but a pop in the VIX could confirm that it really is imminent. And so if the stock market does put in a bottom here over the next week or two, that could lead to a rebound over the next couple months. And that obviously would be not bullish at best for precious metals. And so looking at this chart, we have gold there at the top. We have gold against foreign currencies, gold against the stock market at the bottom. Gold is up to the low 1270s now, where there is a confluence of resistance. There's also strong resistance at 1280. So as gold, or as the stock market approaches this medium-term low, gold is trading around a confluence of resistance, as I already said. So if the stock market does put in a rally, which we expect, look for gold to soften, and gold is coming up on resistance on the chart around 1280. So this is a position where we're probably going to see gold come off, and really, if the stock market does rally for a couple months, how gold and gold stocks act in that environment are going to tell us a lot. They're going to tell us, is the sector ready to begin a bull market move in the first half of the year? Or is it something that's probably going to be delayed till later in the year? In a couple of good signs, you can see there at the middle and the bottom of the chart, gold against foreign currencies. That's had a good rally. It's rallied well above the 400-day moving average. Gold against the stock market, it's rallied well above the 400-day moving average. But both of those ratios look to me like they're probably going to correct a little bit, or at least come back somewhat. But nevertheless, they signal that gold is strengthening in real terms, and that is usually what happens before a bull market starts in gold. So very good sign. The strength in those two ratios is It's really the next move higher in those two ratios that would get me really excited. If we see gold against foreign currencies, get up to where it was in 2016. If we see gold against the stock market, surge above the 2017 peaks and get up to where it was in 2016, then that would be a really, really good sign that a bull market is going to begin very soon in gold. But we're not quite there yet. Again, over the next couple months, with the way things are setting up, I'd expect lower gold prices, higher prices in the stock market. Now, even in that scenario, I do want to note the precious metals sector, silver has been really weak. It hasn't done much. A lot of the tiny juniors in the last couple months have really not performed very well. So those parts of the sector, I don't think they would be hurt that much by some weakness or correction in gold. It's important to keep that in mind. Now, here we have GDX, and what I want to point out in this chart is if you look at the AD line and the bullish percentage index, those are breadth indicators. If you look at those, and specifically the advanced decline line, I've been talking about this being weak the last month or two, but still GDX has continued higher. If you look at where GDX is right now, it's basically up slightly above the 200-day moving average. If you go back to 2015, it touched that moving average. It tested it 3 different times. In all of those times, there was a negative divergence in the advanced decline line. And then GDX ended up going lower after that. Now, if you look at what happened at the end of the year in October, there was a negative divergence in the advanced decline line, but then GDX corrected. And before that 2016 low in January, the advanced decline line was able to strengthen. So it was showing a negative divergence, but very soon it eliminated that and made a positive divergence. So that'll be something to watch for if precious metals do correct or at least go sideways in the next couple months. Now, last thing, this is important. At the bottom, if you look at how GDX is performing against the stock market, in 2015, it never broke above the 200-day moving average. You can see the arrows there, but look at what happened in the last month. The ratio surged above the 200-day moving average, much like it did in early 2016. So that tells me that even though the breadth, the advanced decline line is weak, it still needs to be corrected. That tells me that GDX is in a much stronger position than it was throughout 2015. Now, this is just a fundamental reminder that over the last 65 years, there have been numerous times where the Fed has started or ended a rate hiking cycle, and then they've started a new cutting cycle. That has triggered really good rallies and even bull markets in the gold stocks. And if you look at what's happened in the stock market, perhaps we saw the last hike in December. If you look at the very bottom there, the start of the advance, it tends to be 2 months after the last hike or a median of 3 months after the last hike. Obviously, the timing, it could be 1 month, it could be 5 months, it could have already happened. There's no way to know, but the data tells us that where the Fed is in its cycle, given the context of the market, the bear market, we're seeing some positive signs. We're not quite there yet. It's all really working together and it's looking to be really favorable for precious metals, but not quite yet. But nevertheless, it looks to be sooner rather than later. And I really think with respect to the Fed, the big move in precious metals will begin when the market starts to sniff out that first rate cut. Now, I saw something a week or two ago where the market had priced in half of a rate cut in 2020. So if the market starts to price in more of, or if they price in half a rate cut or a full rate cut at the end of 2019, in the market, that's a sign that the market is starting to sniff out a rate cut. And precious metals, we wouldn't have to wait a couple months, or we wouldn't have to wait for that to happen before precious metals would really take off. They would probably take off. They could take off, 3, 4 months, 5 months before the first rate cut. We don't know for sure. But looking at all this data in detail, I don't want to bore you with all the details, but looking at all of it in detail, it confirms that when the Fed does their first rate cut in a new cycle, precious metals perform really, really well. So we're not quite there yet, but we're close, and we're setting up for that, perhaps at some point in 2019. Just a reminder, you can follow all of my work at thedailygold.com. Consider subscribing for my premium newsletter. That's at thedailygold.com/premium. It's highly affordable, and we're really looking to, right now I should say, we're really looking at researching juniors. We've been in cash for a while. We're really looking at uncovering and finding the best juniors, the ones that really have potential for huge gains when the bull really kicks in sometime in 2019. I thank you for watching the video, and I look forward to publishing another one for you in the days and weeks ahead.